Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, July 23rd, 2009. Well, we're seeing a monstrous rally on Wall Street today, folks. You can see by the chart what happened today. Now, it was a key catalyst. There's a bunch of little things. First of all, it was a combination of short squeeze, as a lot of people thought the market might have been turning to the downside. And again, it didn't actually turn to the downside as it stalled out near a double top. Now, remember the double top from June, mid-June double top. We hit it yesterday. We actually pierced it, fell back down into the close, and sure enough, that was just a little bit of a fake out today to push this market to new highs. And the market really has blasted higher, folks. I mean, this move today is a substantial move. The futures are trading up about 24 points on the day. The Dow is up 175, NASDAQ up 45, and the S&P 500 up about 22 on the day. Really 2 to 2.5% across the board. So a big follow-on move. I'm going to show you the 60-minute in a minute. I want you really to get a sense of where we are. What you're seeing on your chart are the new levels on this chart as we moved up. You do have a little bit of a trend line. This is a major trend line that we've connected, and I want you to follow this one because this is a new trend line. We went right up here, touched it, consolidated, came up, almost touched it again, now consolidating a little bit off of this, and this does seem to be a very significant level on the chart. So watch it very closely, folks, all right? Now, we had a mixed bag of earnings. You had McDonald's earnings, MCD, let me show you that. That's down, getting crushed today. McDonald's is absolutely getting demolished today. You have stocks like Qualcomm also getting hit today, down $1.25, although that is off the low on a nice move up. So there are stocks here that are reporting earnings that are not great, but the market is disregarding them. There's a major disconnect now between Wall Street and Main Street, and I have to highlight that in this free video today because I really want everyone to be fully aware of what's going on here, folks. Major disconnect here, and you have to be aware of what is going on because this is eventually going to correct itself. Now, where it corrects, who knows, but ultimately the disconnect is in full swing. You have companies reporting not so great earnings. You have a few reporting good earnings, but almost all these companies are either just making their revenue numbers or missing revenues. Now, the top line, their earnings per share are fantastic, but it's all because of cost cutting. Remember that. Cost cutting is what's driving this market right now. Long term, that's not going to suffice, folks. 2 quarters from now, when there's nothing left to cut, these companies are going to report some ugly numbers. And again, the market does not see it that way right now and continues to rally, content to kind of live with the wool over their eyes. So please understand that that's going on right now. It is a big deal, and you have to be aware. Alright, if there's one thing I could say, guys, is be very cautious here. Extremely cautious in this market right now on the long side of this market. Very risky up here because of what's coming down the road. Alright, now again, the biggest thing today, what's another driving factor? What's the number one driving factor of this market today? It's not tech earnings, it's not financials. What it is the dollar. The dollar is getting hammered again. Take a look at this drop in the dollar, folks. Absolutely getting demolished early on. That's really what started the rally. Look at the gap up on the dollar here and the move down. That type of angle is exactly why the SPY went like this. Absolutely, folks. That is what it is. That's exactly what it is. Now, why does the dollar matter? Because all commodities are traded in terms of dollars, so when the dollar decreases, in response, they have to increase. When commodities like oil increase, you know what's going to happen. You're going to get the ExxonMobils to have monstrous days. And look at this move on ExxonMobil today. Huge move. A little bit of a gap down, and then a race higher, up $1.43. You have oil making a massive run. Look at the run here. A gap down again. We called this one out yesterday. Again, we talked about this one in the chat room again as being a buying opportunity off the 200 moving average on a gap down. The market's ripping higher. Now, oil is starting to come in a little bit, but for the most part, this market is way too strong to really see any major pullbacks, although a pullback is in the cards, no doubt, just on an intraday basis of being too extended. So keep an eye on that, folks. We will continue to watch what's going on. But nonetheless, the dollar's weakness driving oil up. Oil drives all commodities up. Again, sure enough, you have stocks like U.S. Steel trading up $1.32. Nice move there. As I mentioned, ExxonMobil, Chevron, CVX up $1.81 today. So commodities continue to take this market higher. It's a reinflation continued rally. That's what you're seeing. We took out the double top on the 60-minute. Let me show you this double top, actually, because I think it's very important to go to. And by looking at this, you can really see how we broke out today. So what you're going to do is go all the way back on your 60-minute, back to, really all the way up. Let's go back to this SPY here on the SPY chart. And what you're going to do is go back to June. All right, there you go. And you're going to really focus in on what levels. Number one, here's one level, and then we can actually go back a little further and go get actually the real highs into early to mid-June, and that high right here, a little above 96, was blasted through today, and I mean blasted, folks. This is the previous high. We hammered on it once, twice, on the third time, broke it to the upside. Now, you're going to have resistance at 98, even number. There's also a level at 97.50. If we close back below 97.50 on the SPY, that's going to be a pretty good level on the upside to be resistance. So watch that very, very closely. But any way you cut it, folks, this is a dollar-related market right now. The dollar continues to get hammered. We're actually below a double bottom on the dollar. Let me show you this dollar chart, folks. Take a look at this. We bounced off of it, but this was the previous double bottom level right here, going all the way back. Let's go all the way back here. There it is, right, going back to the early. That's when the market topped the last time. Well, guess where we are now? We're at the double bottom again, right down here. In fact, we broke it, but now we recaptured on the dollar. So you can see how the dollar is continuing to be under pressure. Whenever the dollar is under pressure, this market gets hammered. It is that simple. This market rips higher. Anything else, you'll see, for instance, really the ETFs that are short this market are getting hammered today. That's the bottom line there. But nonetheless, double bottom pierced, bounced back above. Market, again, dollar is weaker on the day. Market is ripping on the day on the dollar, and that's we continue to see that happening here, folks. Really an amazing situation going on. Probably one of the best rallies and squeezes we've had in a while. Take a look at the SPY intraday again here, and we'll put that up. Look at this move. Look at this little bit. We're not even pulling back much. After this type of move, usually you'd see a little bit of a pullback, maybe back to this pivot right here. But no, not at all, folks. You made one little red candle, now green. Over the course of the day, 1, 2, 3, 4, 5 red candles over the course of all the day on the 10-minute chart. That is insane. So again, this market is insanely bullish right now. Very, very powerful. I just have to issue the caution flag as we are up in this range, especially on an intraday basis. You have to watch for some sort of pullback, especially if oil starts to dip. If the dollar can get some strength and oil starts to dip, you will have a good pullback. Financials, believe it or not, are really not leading this market today. Goldman Sachs, look at this chart on Goldman. Now, it's a great chart, but for the most part, Goldman's up about $3.50. That's not a huge move on Goldman. It's a solid move, but not huge. But it's really the Exxons, the Chevrons, the U.S. Steels, the FCX, that kind of stuff, Freeport McMoran, that type of stocks. Those are the ones that are ripping higher today. That's what's taking this market higher. In addition, Amazon has earnings today, and they are just ripping higher as well. Amazon.com trading up at $94, above $94, up $5.50 on the day. With earnings, you got to be very careful there. More often than not, when a stock trades up into earnings, it will fall back down after earnings and come back in, especially if they don't blow away estimates. Now, I think their earnings are going to be very solid. I just don't know if it's enough to factor in this $5.50 up move right now that this market is doing, all right? In any case, folks, going back to the SPY, as we finish this video up, we are touching up here. Look for this blue line to get retested. This is going to be a good resistance level up there. Every time we hit it, we seem to have a good pullback, or at least a little bit of a pullback in the cards. All right, that's all for today. Join the Research Center. Join the chat room. We hope to see you there. We'll talk to you soon. Take care.